Now for our feature story of the day. BlackRock came out with a very bullish publication back in 2022 suggesting investors allocate, what was the exact number? It was, oh man, slipped my mind, 84.9% of their portfolio into Bitcoin, suggesting Bitcoin to hit $47 million per coin. I'm going to break down some of the math, and even Samson Mao says the math checks out. So let's start first and foremost with this tweet that I shared a while back, with BlackRock allocating their optimal portfolio allocation into Bitcoin of 84.9%, according to their very own study released in 2022, which I'll read to you here shortly. That will send the Bitcoin price to $47 million per coin. Samson wrote, the math checks out. Bitcoin is going to $47 million and the crowd is going wild. In fact, there was a recent headline, BlackRock signals a paradigm shift with 84.9% Bitcoin allocation. And in other breaking news, as I shared earlier, shout out to all my stack and fifth level Bitcoin G's who front ran Finkster and BlackRock, because check it, just in, BlackRock and Fidelity now own a combined 477,121 Bitcoin, worth $31.4 billion for their spot Bitcoin ETFs. These ETFs hold 262,721 more Bitcoin than MicroStrategy, and they achieved that in 5 months since January 11th of this year. It took MicroStrategy since 2020 to acquire 214,000 Bitcoin, and as we announced the other day, Saylor is purchasing yet another 700 million worth of biddies from MicroStrategy, so things are about to get lit. So yeah, check this out. Last summer, BlackRock put out a paper stating that starting with a 60-40 equity bond portfolio, the optimal Bitcoin allocation is a large 84.9%. I'm going to read what's highlighted here for you on the screen. Exhibit 4 presents the results starting with a 64 equity bond portfolio, which is produced with a risk aversion of Y equals 1.5. The optimal Bitcoin allocation is a large 84.9%. Now do the math. What would happen if all the major asset managers, BlackRock, Fidelity, they all put 85% of their portfolio into Bitcoin? Game on. The remainder of the portfolio, 15.1%, is split 60-40 between equities and stocks, although Bitcoin has an extremely large volatility of 1.322. The pronounced positive skewness leads to a large allocation and dominates in the utility function. And then they go on, the certainty equivalent compensation required to not invest in Bitcoin is close to 200%. Exhibit 4, starting at a 2080 stock bond portfolio, leads to a 12.5% Bitcoin allocation, and a risk-tolerant investor with an 80-20 stock bond portfolio desires a leverage position in Bitcoin of 106.6%. Now, Kathy Wood has made bold predictions. If Bitcoin even got an allocation from the major asset managers of only 5%, Bitcoin can hit 3.8 million per coin by 2030, which I shared with you here in the show. So yeah, this is extremely bullish, and this is directly from BlackRock. So Samson says the math checks out. We're going to 47 million. Here's some of the math. BlackRock has at that time only 9.4 trillion in assets under management. Now it's clearly over 10 trillion. 0.849 for the right Bitcoin percentage, 7.98 trillion. Then BlackRock will need to allocate to Bitcoin to follow their paper. 7.98, 118 billion of a multiplier equals $941 trillion market cap, referring to the total addressable market. So Bitcoin will be about $47 million per coin. Send it and let's frickin' go. And in other, tweets here, let's see what other data I got. He also wrote in 2022, released that study, which I just shared with you. Obviously very bullish. He also recently tweeted, I know Bitcoin is going to $100,000, or I should say 1 million, my bad. Bitcoin is going to $1 million. The only question are when and how rapidly. Amen to that. We all know it's inevitable. 100% with you on that. But let's dive a little deeper into the newer article published on this event and why it's so significant. In a significant departure from the traditional stance of cautiousness towards cryptos, BlackRock's world's largest asset manager published a research paper, which we covered several times here on the channel, just FYI, advocating for an aggressive allocation to Bitcoin and traditional portfolio investments. Aggressive keyword, aggressive allocation. The research paper, titled Asset Allocation with Crypto, Application of Preferences for Positive Skewness, suggests that Bitcoin should make up a substantial 84.9% of an investment portfolio consisting of 60% equities, 40% bonds. The BlackRock researchers conducted an in-depth analysis of Bitcoin's performance and returns. During this period, they found out Bitcoin exhibited considerable volatility with an annual rate of 132%. I read with you already some of the direct study from BlackRock themselves. What sets Bitcoin apart is the positive skewness when expressed in terms of continuously compounded returns. In contrast to this, equity returns showed a percentage of negative 0.43%, while bond returns were at 0.01%. So you basically guaranteed to lose with equities, and you will lose with bonds because 0.01% is practically zero, especially when you're dealing with inflation, family. Bitcoin's third central moment of returns was an astounding 144% annually, demonstrating a stark contrast to traditional equities and bonds. This unique characteristic of Bitcoin returns makes it an appealing asset for investors seeking substantial gains. That's right. The research also highlights Bitcoin's consistent propensity for significant gains. While returns often follow standard patterns, there are exceptional periods labeled as bliss regime, during which Bitcoin price soar over 100 times annually. This level of return potential is what attracts investors aiming for substantial profits. Even when Bitcoin is expected to depreciate in the standard scenario, the research noted that investors focused on maximizing profits tend to allocate 3% to Bitcoin. This allocation remains consistent even when there is only a 1% chance of a highly profitable scenario materializing. That's right. BlackRock's recommendation to allocate a substantial 84.9% to Bitcoin in a 60-40 equity bond portfolio marks a significant departure from the conservative approach traditionally taken by many financial institutions towards crypto. Now, it underscores the growing acceptance and recognition of Bitcoin as a legitimate asset class that can offer substantial returns. This move by BlackRock follows the US SEC clearance for BlackRock and the 10 other, Bitcoin ETFs that officially went live on the 11th. But I want to know your thoughts surrounding this math. I mean, this guy is going to crazily continue to stack in the biddies because he's a smart man. He knows what's up. His goal is to tokenize the world, and clearly, they're not slowing down. They're going to continue to gain momentum. And considering the ETFs in the United States have already collectively achieved over 1 million Bitcoin, that's 5% of the Bitcoin circulating supply, and they did it in 5 months. That's an average of 1% of the Bitcoin circulating supply per month. What's going to happen in the next 36 months from now? You let me know, family. And what are your thoughts surrounding this 47 million price prediction based off the 84.9% allocation? Holla at your boy. I'm going to read as many of your comments out loud. Welcome, family, to the Q&A segment of the live show. Pump the likes to pump the stream. Over 1,100 people here live and in the flesh. I love it. We're only halfway done with the stream. We got the content out of the way. Now I want to hear your predictions and personal thoughts regarding Bitcoin striking 47 million per coin. And feel free to ask me anything. And if you want to interact in the chat, I encourage you to join the YouTube stream, which is the chat stream you see live on your screen over at cryptonewsalerts.net.